Hello everyone and welcome to episode number 10 of the Candlestick course for beginners. My name is Mr. Crypto Tracker and I'm going to teach you how to trade with candlesticks. In this episode, I will continue to explore interesting candle patterns that tell us more about the mood and manner of market environment. Although the recent price action of a chart is important, earlier price history can also contribute to our assessment of future price movement. The stories, candle patterns tell us about the past and the present of the price all add to our ability to evaluate potential opportunities that will contribute to our success as traders and investors. Before we start this episode, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on to get notified when new video comes. In this episode, I will talk about tweezer top and tweezer bottom pattern. The tweezer top and bottom are combinations of multiple candlesticks that usually appear at the end of an uptrend and downtrend respectively, and they are signaling a trend reversal. Thus, investors can buy and sell an asset more precisely by observing how this pattern appears on a chart. But before we jump into this episode, let's take a look at our learning objectives. In this episode, you're going to learn about the construction of tweezer candle pattern, how tweezers signal trend changes on a long-term chart, and how tweezers incorporate other candle patterns. Let's start with this question. What are tweezer top and tweezer bottom? A tweezer top is a combination of bullish and bearish candlestick at swing high that indicates a possible bearish pressure. In contrast, a tweezer bottom is a bullish reversal pattern at a swing low, showing a possible bullish direction in price. As the tweezer candlestick has both bullish and bearish formations, investors can use it to identify both entry and exit levels. The tweezer top pattern appears at the top of a bullish trend, indicates that bears have become interested in the price, and as a result it provides a sign that bulls should close their positions because there is a high chance of a trend reversal. Ideally, the tweezer pattern should develop with the first session incorporating a long real body. In a declining market, this would probably be a long red candle, and in a rising market, it would finalize as a long green candlestick, as you can see here. The second session is interesting because it has many variations. It's best, but not absolutely necessary, when this session forms with a small real body. You are already familiar with the candle lines that may provide these components. I talked about different candle patterns in previous episodes. And for example, a tweezer type might finish with a hanging man. As you can see here, this shows different formation of tweezer tops and bottoms. So a tweezer top might finish with a hanging man, or a shooting star, or a dark cloud cover pattern. A tweezer bottom could finish with a hammer, or a harami cross, or a piercing pattern. Let's talk more about tweezer top pattern. The tweezer top pattern consists of a bullish candle followed by a bearish candle. The first candle is a bullish one, this green candle, and the second one is a bearish candle. With the first long real body and the second a smaller real body integrating two consecutive highs, the tweezer top tells us that the bullish force of the long green candle began to dissipate with the small real body of the second candle line. Also, since the second candle cannot make a higher high than the first candle, the tweezer top adds to the outlook of awakening of demand. Now let's move to the tweezer bottom pattern, which is the opposite of tweezer top. It appears at the bottom of a swing low and indicates a bullish reversal. The tweezer bottom pattern consists of a bearish candle followed by a green or bullish candle, as you can see here. In trading, the tweezer bottom pattern is significant because it's directly related to a trading entry. It appears at a swing low with a strong bearish daily candle, or it can be in any time frame, it doesn't matter, and indicating that bears are aggressive in the price. However, the price rebounds higher on the next session due to the buyer's interest. So as soon as the second candle closes, investors may consider it as a buying opportunity. But the most important parameters in your trading journey is money management. And I put a lot of emphasis on money management in my previous videos. And if you don't have a good money management system, please stop trading right now and go and start learning about money management. And if you don't know where to start about learning money management, I recently published a course on Udemy. The title is Money Management System for Traders. And in this course, I try to teach you how to develop a money management system for trading journey, how to calculate the optimal fraction of capital to be risked in each trade. I also talked about how you can develop a trading journal to track your profit and loss, how to calculate your trade size, and also I talk about a very important parameter or concept, which is what is the risk of ruin and its role in your money management. I will put the link in the description. You can go to these websites, and if you scroll down, you can see the course content here. And the first 2 episodes is free. You can go and watch it, and then you can better understand the importance of money management. Okay, let's continue talking about tweezer pattern. The next question is how to identify tweezer tops and bottoms. Spotting tweezer top and bottom patterns on a naked chart is not difficult. I can say it's easy. Each version of the pattern consists of 2 long bodies, candlesticks, appearing in parallel but opposite direction. You can see the direction is opposite. The first one is green and the second one is red. Finding a solid trend in the prime is the primary requirement for the tweezer trading method. So when the market is moving up, as you can see here, price continue to increase. However, a sudden bearish candlestick, as you can see here, similar to the latest bullish candlestick, appears and negates the bullish movement. This is how a tweezer top pattern appears, which indicate a bearish pressure. Please also keep it in your mind. All these patterns we are talking about in this episode, they are important if they happen at a very important price level. It can be at a very major resistance or a major support. Then we will put more attention to those patterns which appears at a major support or resistance. Let's move to tweezer bottom patterns. And the tweezer bottom pattern is the opposite version of the tweezer top and appears in a downtrending market. You can see we have a clear downtrend. Price keeps moving down when suddenly a bullish candle, this green one, a bullish candle appears, which seems similar in size to the previous bearish candle. So as a result, a tweezer bottom forms, indicating a possible bullish trend. If you are a long-term trader or investor, you probably study weekly and monthly charts to obtain a longer perspective. So, as opposed to shorter time frames of intraday and daily charts, tweezer tops and bottoms that appear on weekly and monthly charts potentially indicate important reversal signals. For example, if a declining stock finished the current week by successfully holding last week's low, it could be the start of a base for a future rally. Conversely, if a 15-minute candle on an intraday chart successfully holds at the prior candle's low, it's not a significant signal for us. So let's review the key characteristics of the tweezer top and bottom patterns that I talked about it so far. So for the tweezer top, the first candle is bullish and the second candle is bearish. The second candle's high shouldn't exceed the first candle's high. For the tweezer bottom, the first candle is bearish and the second candle is bullish, and the second candle's low shouldn't exceed the first candle's low. These are important characteristics of tweezer top and bottom pattern. Let's take a look at a few charts and talk about how to trade tweezer tops and bottoms. As I said before, these patterns are very important for us if they happen at a very important resistance or a support level. In this case, price approaching the support level and it bounced a few times. We are talking about the Bitcoin chart. And finally here, we have these important pattern. So we have a red candle, then another green candle, which for a tweezer bottom for us. And as I said before, at the close of this second candle, this green candle, we can enter to a long position. We can start buying here and put your stop loss in the a little bit lower than the low of the red candle. This is how we can trade tweezer tops. And the key parameter is if these patterns happen at a very important price level for us. And here we have a tweezer top pattern. It happened. It starts to form at a very important resistance level. And then after the closing of the red candle, we can open a short trade and put the stop loss a little bit higher than the highs of the green candle. So this is how we can trade. But in this course, our target is not to teach you how to trade it. We just want to have an introduction. The main focus is you understand the candlestick patterns, candlestick charts, and how you interpret what kind of signals they are trying to give you. So this is the end of this episode. I highly recommend you to follow me on Twitter, and also I have a free Telegram channel where I usually share my long-term and short-term ideas with my friends there, and you can join me there and practice what you learn in this course and see how I incorporate them in my real trading journey. So have a great time and see you on the next episode.